Hi there, welcome to kneppyinvests. Time for another technical update. And in today's video, I'm going to look at 20 companies. A bit heavy on lithium companies. In fact, three of the companies I'll be looking at, in fact, the first three companies I'll be looking at are in the lithium space, including Allkem. And the other two lithium companies I'll be looking at, and I had a pretty large choice here because over the past few days, particularly after Allkem have decided to merge with another company and then primarily list on, I think it's the New York Stock Exchange, we have seen a little bit of excitement in the lithium space. So the other two companies, lithium companies I'll be looking at in today's video include or are Lake Resources and Core Lithium. Now, I actually am a shareholder of Core Lithium now. They have recently gone into production. And even though I'm not bullish about the long-term future about lithium, just because I think eventually there will be a significant oversupply, in the medium short term, even though lithium prices have come down a little bit, I am a little bit bullish, particularly those companies that have or are in production. I'm not sure about Lake Resources, but their share price has completely taken off the last few days. And when I say I'm not sure, I'm talking about how long they have to wait until they get into production. Now on to the non-lithium companies that I'll be featuring in today's video, and that includes 17. So those companies are K&S Corporation, Aristocrat, Vysarn, Probiotec, which actually I'm a shareholder of that company. I'm also a shareholder of Aristocrat. Both of those companies I am a long-term hold. Then we'll take a look at Latin Resources, Integrated Research, Bigtincan, and a company I wish I owned, WiseTech Global. Then on to Envirosuite, and there's one reason I wanted to include Envirosuite in this video. In fact, I might do a standalone video on that company just because of what happened on the last trading day. That'll become obvious when I talk about them. DGL, a company I have owned in the past, but no longer am an owner. And then I'll give a bit of an update to Electro Optic Systems. I did a standalone video on this company maybe a week ago. Also included this company in last week's technical update. And I think it's a good idea to have a look at what's happening with that company because a lot of volatility when it comes to Electro-Optic Systems share price. And then we'll have a look at Mesoblast, 4D Medical, and Synlait. Hopefully no one watching this video has been a Synlait shareholder over the past month, and that'll become obvious why I mentioned that when we look at that particular chart for that company. And the last three companies I'll be looking at in today's video include a company I actually do own in Dropsuite. Have a look at Graincorp, and the last company is a bit of an update, Besra Gold. That share price of that company has absolutely gone off last month and a half from a share price of about 4 cents to a high of about 44 cents. Yeah, that company has been a 10-bagger over the past month. And I'll talk about why. I think I've done a standalone video on that company and trying to explain why the share price or the market was getting excited. But we'll have a look at a bit of an update to the chart for that company. But first, let's start with Allkem. And what I'm doing in this particular video, instead of doing slides, straight to trading view. And the reason I want to do this is just to manipulate the chart from a weekly to a daily. Also can zoom in and out, that sort of thing. Also have a look at, on the right-hand side, you can also look at the market cap of a company, for instance, and this is assuming that TradingView is right. Sometimes TradingView is not right when it comes to, say, the market cap, but the market cap of Allkem is $9.5 billion. Price earnings ratio, apparently 14.2. You have a look at the revenue of this company over the past few years. Revenue from 2021 was 113.6 million. That increased to over $1 billion in 1 year, while the profit went from negative $80 million to positive 421.5. And the main reason behind that is maybe an increase in production, but also because of what happened with lithium prices. So this is the weekly chart for Allkem going all the way back to 2017. We could probably zoom out a little bit, going back to maybe the last 6 years. And during 2018-19, and remember, 2017-18, there was a little bit of hype in lithium. So just keep that in the back of your mind. If you are bullish on lithium, that sometimes, even for these type of commodities that we know we're going to need a lot more in the future, they still are quite cyclical. And the best time to buy these sort of companies like Allkem would have been at the bottom of the cycle. Now, sometimes you don't know when the bottom of the cycle is, but you don't have to time the bottom. It's not about timing bottoms, not about timing tops. It's getting or buying in when the upswing has started, when you're starting to see the share price move up, and selling when you start to see a share price move down, when you see the share price struggling. So the time to buy Allkem would have been, say, late 2020, when we did see a lot more interest in this company, and that's where we did see the uptrend start. So you could have bought, say, Allkem at around about $4, which was well above the low, which was $2. So even though the share price more than doubled, you still could have made a lot of money if you just looked at the chart. So I've done this a lot in the past, not quite as much as I probably would have liked. I did not do this Allkem, but there's a lot of companies on the ASX right now whose share price are in uptrends. Even though the market is going sideways, you still can take advantage of companies where there is positive sentiment when the share price is at an uptrend. And for Allkem, that uptrend lasted, you could say it was struggling, because the uptrend really went or started late 2020 and may have ended in the start of 2023. But the most recent week, the share price of Allkem went up 21.7%. That's in 1 week, which was their best performing week ever. Maybe not ever. I was trying to find a week where that return was comparable, and there was not 1 week like that. There was a few weeks close. I think there was 1 week, say back in November 2020, up 18.9%. If we go back to late 2019, there was 1 week up 15%. There was another week it was up 20.6%. Maybe all the way back into 2017, there was a week where it was up 19%. Another week where it was up 19.7%. So this might have been the best week that Allkem has seen over the past 6 years at least. And there was a reason behind that. So let's have a look at the data chart just to see what happened during the week. And you see on the Thursday, there was a massive update for Allkem, up 15.7%. And then that sentiment went into the next day, up another 1.3%. And this all had to do, if you don't know, Allkem had to do with sort of like a merger between Allkem and another company called Livent. And if I remember correctly, I didn't read much about this, but if I remember correctly, they're going to have their primary listing in the United States, either on the New York Stock Exchange, more likely on the New York Stock Exchange, over, what's the other one? NASDAQ. Let's see, your primary listing on the New York Stock Exchange, foreign exempt listing on ASX via CDIs. And the market really like this news. They really like this merger. They see it as a positive for Allkem moving forward. And really, the share price of Allkem really has done nothing. A lot of volatility in this chart since the start of 2022. You can see the share price going up and down in waves. Now, the share price has actually responded by increasing 50% from the lows we saw back in March. So share price then got below $10 for a very brief period of time. Let's see the day, the 24th of March. In fact, the share price fell to $9.80, and now the share price is above $15. So we actually have seen a 50% rise in Allkem share price in the past, not quite 2 months. So you can see a lot of volatility in Allkem share price. And I think still moving forward, a company like this, their share price is still going to be highly influenced by the underlying commodity, which is lithium prices. And it's actually really hard to find lithium prices anywhere on the market. I do think I have it on my trading view. I have a lot of watch lists, or whatever you want to call them. I think they call them watch lists here. Lists, they just call them lists. So I have lots of lists on this, and one of the last ones I have is just the markets. Anyway, that's on to Allkem. A nice reaction from the market in response to this merger with, what was it called? Livent, primary listing on the New York Stock Exchange. Now, some of this positiveness when it comes to Allkem also sort of penetrated into, maybe that's not the best word, but also flowed through to other lithium companies on the ASX. Not all lithium companies, but just some of them. One of those companies is Lake Resources. So let's have a look. Always have a look at the weekly charts. So this is Allkem's weekly chart. So if we go back to 2017, when there was that little bit of a hype in lithium companies, you can see Lake Resources share price went from about 3 cents all the way up to a high of 30 cents. So that was a 10-bagger here over a short period of time in late 2017. And then that hype, because there was a bit of a lithium prices fell, that hype fell away. Share price of Lake Resources went all the way down to 2.5 cents again. In fact, lower than it was back in before that hype in 2017. And then Lake Resources share price just went bonkers. In fact, it went from 2.5 cents, or just above 2.5 cents in late 2020, all the way up to a high of $2.63. So that's not a 10 bagger, because a 10 bagger would have been from 2.5 to 25 cents. That's a 100 bagger in a fairly short period of time. So we're talking about almost a 2-year period. That was a 100 bagger. So congratulations to those shareholders who held during that period. But you would have had to sold or bought at the bottom and sold at the top, which is almost impossible thing to do. And share price has struggled since then. Share price has gone from $2.63 to back below 50 cents. So let's have a look at the daily chart just to see what's happened in the past few days. So share price of Lake Resources fell through a support level at around about 57 cents in March. If you just take that resistance level, you can just see it tried to get above it, back above it in April, fell back down. And then on the day Allkem announced this merger, there was a lot of excitement in Lake Resources. Share price rose 12.8% that day. And then share price actually went above that resistance level on good volume. There was pretty good volume that day, not as high volume as we've seen in the past. And then the next day, the excitement kept going. Share price of Lake Resources went up another 13%. So share price has broken through that resistance level. So maybe now that will become support. So a little bit more excitement in Lake Resources. I wouldn't say the downtrend in the company share price has come to an end right now. I'd like, just because the share price right now is in a resistance zone, and that resistance zone is that red area or anywhere below the 150-day moving average, because there have been or will be a lot of shareholders who bought into Lake Resources at higher prices who now are seeing the opportunity to sell out, not at, say, 40 cents, but now at 65 cents. And just like Allkem, the share price of Lake Resources has run up from about 40 cents on the 27th of April to a current share price of 65 cents. So the share price has more than increased by 50%. So more than 50% increase in Lake Resources in about 10 trading days. So without doubt, there will be some shareholders, some, I won't say negative shareholders, but some shareholders who think this company is a dog stock because they bought in high prices, who now see the opportunity to get out. Now on to Core Lithium, a company I have taken a position in. One of the reasons is they are now into production, and that's the main thing. Let's just go to Lake Resources. I don't think they have released any announcements recently that could sort of justify the current interest in the company. In fact, their last announcement was their quarterly report, which was released on the 28th of April. So that was near the time of the share price low. So since then, it's just a shift in sentiment in the overall lithium space. Now, Core Lithium has gone into production, and we did see their last price-sensitive announcement was again 26th of April on their quarterly activities and cash flow report, and they did reveal that they were actually operating cash flow positive, if I remember correctly. Let's go all the way down to the bottom. Yeah, receipts 20.1 million, operating cash flow positive 8.4 million, but spending a lot of money in capital expenditure 15.9 million. And other non-current assets, mine development, 21.8 million. So still burning through cash, but this company will have a lot of cash coming in. Unfortunately, lithium prices have gone down a fair bit over the past, say, 4 or 6 months, which is why a lot of these share prices of these companies have dropped off a lot. But anyway, let's go back to Core Lithium's chart. So if we start with the weekly, like I want to do with all these charts here, just like every other lithium company, a little bit of excitement back in 2017. You can see the share price ran up a little bit. Maybe not as, they might not have been called Core Lithium back then because they did change the name. And then just like every other lithium company, the real excitement or the start of the excitement was in late 2020. For Core Lithium, it was a little bit later than some of the other companies. In fact, the excitement started around about November. You can see a breakout in the share price. This is a typical breakout where you see increasing volume, share price going up, and then share price keeps on going up, and still a fair bit of volatility. You see the share price increasing exponentially in late December, January 2021, and always, when you see that sort of exponential rise in share price went from 4.8 cents to a high of a high of 42 cents, almost a 10 bag in a very short period of time. When you ever see that sort of rise in share price, there will always be some profit taking coming in. And there was a little bit of profit taking, but then you see share price go sideways, which is telling the market that the selling has come to an end. So the share price goes sideways, and then you wait for some volume. The other thing you notice here, volume went down during that period. So then you wait for volume to come back in, and then the volume came back in about July. So there was a little bit of a wait there in July, and then the share price just kept going up. So share price went from about 25 cents to a high of $1.88. That high was reached in November 2022, so actually not that long ago. And then the share price has retreated a little bit. But in saying that, the share price has been in a downtrend since late 2022. Share price has moved from, say, $1.30 range down to low of about 75 cents or just below that. But again, just like Lake Resources, news in regards to Allkem has seen some positive effects on Core Lithium's share price, and the share price has taken off. In fact, the share price increased 8.8% on the Thursday, and then a further 5% on the Friday. Not quite as interesting, maybe not interesting is the right word, but not quite as buoyant, maybe as excited as we saw with what's the other company, Lake Resources. But the share price has moved from about 75 cents to $1.16. So is that a 50% rise? So 35, 20, yeah, it's a 50% rise, or just above 50% rise. Half of 75 is 37. Add that to 75 and you get $1.12. So a 50% rise in Core Lithium share price from the lows we saw back in March. So a little bit excitement in Core Lithium, a little bit excitement in Allkem, a little bit excitement in, what's the other one, Lake Resources. I haven't shown you Liontown Resources. That's a different story. That excitement was in regards to a takeover bid about over a month ago. But when I did actually have a look at some of the lithium explorers, that excitement hasn't translated just yet to those companies. So most of this excitement is to the larger lithium players. Now on to other companies. And the first one is KSC. This is a transport and logistics company, something like that. Start with the weekly. So, and I'll also tell you, this company has not released any news since February. So let's have a look at the last price sensitive announcement was just quarterly rebalance from the S&P in March. So that's not really relevant to K&S Corporation, but the last price sensitive announcement this company was released was a half year results in February. And you can just see what happens with a shift in sentiment. So even though this company hasn't released any news flow since February, I'll show you, this is definitely, you'll be definitely able to see this in the daily chart. But this is the weekly chart. And going back to 2019, the share price of K&S Corporation was trading in a range between about $1.19 and about $1.90. And then the share price broke through that range, or that resistance, or the top of that range, which is a resistance level, in September of last year. Some nice volume coming in. In fact, there was pretty good volume in the weeks leading up to this breakout. So this is a classic breakout. Share price going through a resistance level on nice strength, on good volume. And then we want to see what happens when the share price pulls back to that old resistance level. In fact, K&S Corporation share price has pulled back to that old resistance level, now support level, about 4 or 5 times since that breakout in September, and has just pulled back in the last week. So let's have a look at the daily chart just to see that. In fact, I'll get rid of these ribbons just zoom out a bit. So the share price broke out above that resistance level on the 15th September 2022 on pretty good volume. And after that, look at all the times the share price has come back to that level and has remained above that level. So we're talking about the 26th of September, 7th of October, another one on the 22nd of December, another one on the 14th of February, and also the 17th of February. And now, even though the share price took off after their results, so the half-year results were pretty good. You just see that by the reaction from the market. Share price, in fact, went from about $1.94.05 all the way to a high of $2.63. Share price has pulled all the way back to that resistance level. Not a lot of volume. So I wouldn't say highly liquid, but not definitely liquid. And the share price right now is at $1.95, right on or just above that resistance level. So if you like this company, and there is a little bit of excitement in transport logistics companies, we talked about Lindsay Australia, what's the other one? CTI Logistics. Maybe this little pullback is an opportunity for us shareholders, for us investors to take a position in this company. I don't know a lot about K&S Corporation, so sometimes when I don't know a lot about a company, I'll just go to TradingView, have a quick look. Market cap 267 million. Dividend yield 7.7%, price earnings ratio 10.9%. Now, I'll take a lot of these with face value because they could be wrong. And then the other thing I like to look at is just the revenue. So revenue 776 million, so low margins here, income or profit of 17.4 million, profit margin 2.2%. Revenue looks like over the last 5 years, relatively flat, but a lot of interest in logistics or transport logistics companies, and that has played through, particularly with Lindsay Australia. And maybe, just maybe, this is a time to do a little bit of research in K&S Corporation. Now to Aristocrat, and I do own shares in this company, so let's have a look at the weekly chart first. And we'll zoom out a little bit more. We'll put the ribbon, actually, leave the ribbon off. If you go all the way back, this share price of this company has been in an uptrend for quite a few years. In fact, for about 10 years, share price has increased from about, we'll say $2, that was a little slow in 2011, to a high of $48. So this, I would classify this company as almost a high quality company. The only problem is, for some shareholders, is just ethical reasons. They might not want to, moral reasons, they might not want to invest in this type of company. Anyway, share price of this company has been trading in a range. Let's have a look at the daily chart. All right, now put the ribbons back on. Trading in a range since 2022. So we're talking about a 1 year range here. When the share price got to just above $38, share price pulled back. When the share price got down to about $30.50, share price started to go higher. But you'll notice what's been happening over the past month. Just zoom out a little bit higher. Share price got to the top of the range, that resistance level, on the 5th of April, and then the share price stayed below that resistance level for about 10 trading days. But the share price wasn't going much lower. And this was telling me that whenever the share price got to around about $38, we saw a little bit of selling, but there wasn't enough selling to drive the share price any further down below $37. And there was enough buying to keep the share price just below that resistance level. And then over the last few trading days, the share price has gradually got above. So the bulls are slowly winning the battle here. And then on the Friday, the share price did close at $38.69. So quite a bit above, maybe 1% above the resistance level. So potential, just a potential, but a potential breakout in the share price for Aristocrat. Now, no volume. That's my only concern, is fairly low volume over the last few trading days. But the last time the share price was this high, we go back, the last time the share price was this high was way back in February 2022. So we're talking about a 1 year high when it comes to Aristocrat leisure share price. So potential breakout. I would have liked to see a little bit higher volume. And I don't think this company has released any. They did release, they're supposed to release the half-year results very soon, or the full-year results, I forget which one. So if you go back 1 year, in May, they released the half-year results on the 19th of May. So within the next week, we should see some half-year results from Aristocrat. Did I call this company wrong before? I have no idea. So we should see some half-year results from Aristocrat within the next week or a bit. And maybe that's why the share price is attempting to break out. So maybe the market is thinking that the surprise or the announcement, half-year results, might surprise the market. And that's why, or might surprise it to the upside. Now to a company that did release some positive news during the week, an earnings update. I would have liked to title this announcement to be earnings upgrade, so we know straight away it's going to be positive. But this was an earnings upgrade. The company forecast to deliver net profit before tax of 6 to 6.5 million. Previous guidance was 5.1 million. That's a very definition of a profit upgrade. Sometimes companies release a profit upgrade, but it's in relation to revenue or EBITDA. But this is profit before tax. Now, maybe you say, It's not exactly the profit because it's profit before tax, not after tax. But again, I think this is a profit upgrade. So you would expect when a company releases a profit upgrade, which they released at 12:49 p.m. on the 11th of May, that the company or the share price should go higher. So let's see what happened on the 11th of May. Share price only increased 4.7%. The next day increased 2.7%. But we can see a ring, not a ring, we can see a run of up days. 5 up days in a row for this company. Share price has gone from 9.7 cents to 11.5 cents. So not a significant reaction from the market, but still it's a reaction. So let's have a look at the chart for Vysarn. And this is actually a nice looking chart. Again, not a lot of volatility, not a lot of action, but the share price has moved into a well-defined uptrend. I keep mentioning I want to start with weekly charts. So let's have a look at the weekly chart. So the share price of Vysarn reached a low back in, well, this is, if I remember correctly, this is a merger of 2 companies, if I remember correctly. I'm not fully across this company. So this goes back to 2014 and 15, and there's a massive gap between 2016 and 19 here. So this is 2016 and this is 2019, if you can see the chart. But the share price of this company really can only be judged since about September 2019. And the share price has gone up since then. Now, the share price right now is not at a high since that period because the share price actually did reach 15.5 cents in January 2021, but the share price is in an uptrend right now. Still a little bit of illiquidity when it comes to this company. That does not concern me. And for those who don't know, even though this company is profitable, we know they're profitable because of the profit upgrade. The company only has a market cap of 45.6 million. Revenue has been climbing over the last 3 years. In fact, revenue has gone from 11.9 million to 46.3 million. Profit's gone from 4.8 million, 344,000, 2.9 million. So you might say profit margins have gone down and a lot of volatility in that profit. So maybe that's why there hasn't been a significant reaction to this market, to this announcement. So maybe I might or should do a little bit more research on Vysarn. I'm pretty sure they are, I could be completely wrong, I'm pretty sure they are, I was going to say, a mining services company. And according to TradingView, this company engages in the hydrogeological and dewatering drilling business. It provides water management consulting services in hydrogeology, hydrology, and environmental planning. So maybe a little bit different than what I thought they'd do, but maybe this company deserves a little bit more attention. Now onto Probiotic. And I'm pretty sure Probiotec. I am a shareholder of this company. I've been a long-term shareholder. And when we look at the weekly chart, you'll notice, pretty obvious, a pretty strong resistance level at just under $2.50. So a beautiful run in the share price from 2017 through to 2020. And I was a shareholder during that period. Then I sold out, and then I bought back in maybe about 6 months ago. And the one thing I was waiting for was a breakout above this resistance level. And it's pretty, or should be pretty obvious, why $2.48 or around that level. Now, I don't believe that resistance levels are one price, so $2.48. I believe it's sort of a range, say between about $2.45 and $2.50 is a resistance zone for Probiotic, because the share price got to that zone in January 2020. It also got back up to that zone in November 2020 and has been trying to get into that zone or around that zone ever since then. And whenever the share price gets to around about $2.40, $2.45, we see the share price pull back. But you also notice the lows keep getting higher. So this is sort of like one of those ascending triangles, I think that's what they're called, where the top is flat, the top of the range is flat, but the bottom of the range keeps getting higher, and then eventually you want to break out. And this is a classic breakout. Look at the share price. Opened above the resistance level during the week. Now, there is a reason behind this, and then remained above during the rest of this week. I think it opened above the resistance level on the Monday. Yes, it did. So the share price on the Monday, 8th of May, opened up 6.3%, and the share price kept on going up. This is a classic breakout, par the volume, lower volume than I would like, and no announcement from the company. What's going on? So let's have a look at Probiotic announcement. No recent announcements available within this time frame. 1 month, 3 months. Last announcement this company released was the half-year results in February. just like K&S Corporation. So what's going on? So all you have to do is just Google the company. Probiotic, I've done this before I started recording this video. Probiotic, and there's an AFR announcement on the Monday. Pharma manufacturer Probiotic courts M&A interest cause in Canterbury. Small Cap Probiotic Limited, which acts as a contract manufacturer for the likes of Pfizer and L'Oreal, is understood to be fielding interest from suitors keen to assess whether it's worth taking the company off the ASX board. So this is just about rumors in regards to the company being taken over. So again, just rumors, no financial reason why the share price has taken off like that. I prefer financial reasons over speculation, like potential takeover bids, which may or may not happen. Who knows? Now onto Latin Resources. I have done, or maybe not done a standalone video on this company before, but definitely I featured this company in one of my videos before, just because I remember the logo. That's the only reason I remember Latin Resources. And maybe I did a video on this company, or included this company in one of my videos back in early 2022, because the share price took off. Massive volume. Share price went from about 2.5 cents, or just above 2.5 cents, all the way to a high of 22.5 cents in about 4 or 5 weeks of trading. And then the share price pulled all the way back. So again, whenever I see the share price increase like that over a short period of time, there will be eventually some sellers who come in. And that's why the share price pulled all the way back. But when it pulled back all the way down to 6.2 cents, there was a little bit of buying coming in then, and the share price has remained in an uptrend. When you look at this weekly chart, share price keeps on going up. Maybe not without the volume we saw during March 2022 until the last week, but definitely share price has remained in an uptrend. And then the share price increased 21.4% on Friday the 12th of May on increased volume. In fact, that volume was the highest volume we've seen since, or this company seen since August. So when I saw this, and the share price now is at a 1-year high, the other thing, last time the share price was this high was in that hype period in March and April of last year. So naturally, you'd think the company released a price-sensitive announcement. Well, not exactly. So the company didn't release a price-sensitive announcement, but the company did. And they also released a presentation on the 11th of May, but the company released a company presentation, CG Global Metals and Mining Conference on the 12th of May, which was not marked as sensitive. But obviously someone in the market liked what they saw in that presentation. Maybe they didn't like what they saw in the 11th of May presentation because there's no reaction from the market in that. But whenever I see presentations released like back to back for a company, I'm assuming this company has no cash flow. It's not in production. I could be completely wrong. So I haven't looked at any of this before. So first time I've looked at the cash flow. I'm pretty sure I would have remembered if Latin Resources had cash flow. So all the way down to the bottom. No cash flow. So this company is not in production. Burned through $5.2 million of cash. How much cash do they have on hand? They have still plenty of cash. $21 million of cash on hand. And the reason I'm looking at this is sometimes I do get a little bit wary. When a company releases quite a few presentations, they are trying to sell the company to the market in preparation of a capital raising. So plenty of cash on hand. Market cap of this company is $355 million. I'm not even sure what they do. What are they exploring? Let's have a look, see if the trading view is right. Engages in the identification and definition of mineral resources in Latin America. Well, by the name. It focuses on these projects. Doesn't say exactly what they're looking for. And funny enough, why don't I just look at the presentation? Yeah, I haven't even looked at this presentation. So when you don't know something, you just look at the presentation or go to the company's website. CG Global Metals market thingy. Market spodumene is essential for energy transition. So straight away, we know this company is all about lithium. Lithium and copper projects in South America. So copper exploration in Peru, lithium exploration in Brazil, and also in Argentina. So there again, this is another lithium company. And potentially that excitement, because of Allkem, flowed through to Latin Resources. There is that potential. So maybe it was nothing to do with these presentations. Maybe it was just that excitement with Allkem that flowed through to. I did not think of that until right now because I had no idea what Latin Resources does. Now onto a company that I've never owned, and I wish I did own. Well, no regrets. That should be the motto of all of us. When we ever make a decision, no regrets, or lack of a decision, no regrets. So if I could go back in time, would I buy WiseTech? Yeah. Yeah, if I knew the future, yeah. Look at this beautiful chart. So when this company listed on the ASX back in 2016, April 2016, share price was around about, got to a low of $3.41. Share price now is $70. That's a sort of return you want over a 7-year period. Jeez. Has been times when there's been a little bit of wariness about this company. There was a short report. I forget when that was. Was that short report in 2019? Share price went to a high of about almost $40. Share price pulled all the way back to $10. So share price decreased 75% during 2019 and the start of 2020. But the share price just keeps on going up. A little bit of volatility there. The last time to buy this company, I should have taken a position, was back in June. Have a look at the daily chart now. So back in June, the share price fell to about, was it $40? $34. 17th of June, and the share price has more than doubled since then. So the only negative thing about WiseTech would probably be the price to earnings. 101 PE ratio, market cap 23.2 billion, a revenue of 632 million, but this company is profitable, $194 million of profit in the last financial year 22. So I think the market is pricing in a lot of growth, and if that growth doesn't come, share price will suffer a lot. But just look at that positive sentiment. And I think the reason I decided to include WiseTech in this video is the share price closed at a record high on Friday, the 12th of May. Go WiseTech. Good work, WiseTech. Now to integrated research. Let's have a look at their weekly chart. So this goes back 2000. We'll go back to 2011. So share price in 2011 was around about 25 cents. And then share price went a beautiful uptrend from there, 2011, all the way through to 2018. Share price went from 25 cents to $4. So that's a 416 bagger over a short period of time. Well, maybe not short, 6-year period. But over a 6-year period, you sort of want a 16 bagger. You'd love to have a 16 bagger. But the company has gone through some difficulties since then. Our share price did plunge in 2018. So this massive plunge you see here wasn't COVID-19. That was something else. I forget exactly what. And you can't hardly see the COVID-19 plunge. It's right in here. And the share price took off during the rest of 2020. Share price went almost to $5. But look what's happened to the share price since that high of almost $5 in August 2020. Share price has gone from almost $5 all the way down to a low of around about, we'll say 30 cents or just above 30 cents. So business has not gone well for integrated research. Just look at the profit or revenue. Revenue has dropped from $111 million in 2020 to $63 million in 2022. Profit has gone from $24 million down to $1.5 million. Profit margins have also suffered. And there have been some problems for this company. The question I have, and the market probably has this as well, can management turn it around? Can the management start increasing, whatever they're going to do, what are the things they're implementing, will that lead to revenue start increasing again? And if it can, just based off the market, this is why I'm really following this company closely, market cap right now is $66 million. $66 million. This company has been profitable and highly profitable in the past. So if, and it's a big if, massive word, big if they can turn around, I think this would be a screaming buy, but I think that's a big question. Now, I think the reason I wanted to include this company, you can just see a bit of volatility in the past, say 6 months or so. Share price got down to 32 cents in November and then went up all the way up to 65 cents. So share price more than doubled in about a 3-month period between November and January or February. But the share price has pulled all the way back to, what's its share price now? About 36.5 cents. But look at the last 2 trading days. Massive volume coming in. I don't think the company has released any information. I'm assuming they haven't. I think I would have noticed if they had. No announcements, but massive volume have come in on 2 big down days. Down 6.2%, then down another 4%. But it's the volume, which means, and if you just do a little a fairly short support level right on 36.5 cents, just going back to March. So it's not a long period resistance level or support level, I should say, but the share price has hit that and remained above it. But it's the volume, really big volume coming in, not only really big volume coming in the last 2 trading days. If we go back to April, we also saw some pretty big volume coming in. So that could be an indication there is a fund manager taking a position in this company. So I haven't had a look at any, I don't think they've released any updated, what do you call them? Whenever I want to, no, what do you call it? Of course, I can't. Ceasing to be a substantial holder, those sort of announcements. Not ceasing, but we want to see if there's any changes to substantial holders. And we haven't seen anything released like that to indicate that there is any big manager, fund manager, buying some shares in this company. But typically, if you do see volume like this over the last month, there is a sign possibly that there is a fund manager coming in and taking position because they see some value in this company. So I'm definitely keeping a very close eye on integrated research. And if they release any good financial news, I think we will see the bottom being reached. We can probably safely say at that point in time, the bottom has been reached for integrated research. Now on to another company, but unlike integrated research, where they had some very large volume coming in, Bigtincan has seen the share price rally in the last 2 days, 8.5% and then 8% the next day. So say 20% rise in 2 trading days on low volume. And that's not a good sign. So we want to see, when we see this sort of rally, we want to see it on high volume and preferably on the back of some positive news from the company. Now, I have been a shareholder of this company in the past. One of the main reasons, if we go all the way back to when they listed, which was 2017, we saw the share price in a nice uptrend, beautiful uptrend. Share price went from, say, 30 cents or about 20 cents all the way to a high of $1.56. I do have quite a few problems with this company. In particular, they are just highly acquisitive. It doesn't mean they're curious. I mean, yeah, they buy a lot of companies. So we just don't know how much organic growth there is. I prefer to see a lot of organic growth and a company less reliant on acquisitions. But Bigtincan just keeps doing acquisitions. The other thing, there was a takeover bid for this company. I forget when it was, late last year, which was significantly higher when the share price was. They knocked back that takeover bid, and then they did a capital raising at a significant discount to the share price. The market absolutely hated that. That's why the share price on the 9th of December fell 21.5%. A few days previous to that, the share price shot up 11% on the back of that potential takeover bid. So those decisions by management had an effect on shareholders. So I don't think the shareholders had as much trust, faith in management. So a little bit of bad management, I think, in my opinion, from the company. Bad management decisions, I probably should say. Decision making is highly important. When it comes to management, it comes to all of us, but particularly when it comes to management, and I'm not sure why. Haven't really followed the story of Bigtincan since then. But the main thing when it comes to Bigtincan, a really good price action over the past 2 trading days, but low volume, fairly low volume. So I would not get excited about what happened with Bigtincan unless there was something else out there which might explain why Bigtincan share price run up over those previous 2 days. Now to Envirosuite. I was thinking of doing a standalone video for this company, not because of the chart, the price action, but the volume. Massive volume coming in on the last trading day. 15 million shares traded. That could be a good sign. But let's go have a look at Envirosuite. Now, this is another company I've held in the past. No, I'm not a shareholder right now. So let's have a look at summary, course of sales. And this is why there was massive volume. So at 4:12 p.m. in 19 seconds, there was one trade at 8.91 cents. And that trade was for 15.6 million shares valued at $1.4 million. Condition there is L5, XT. XT is cross trade. So it's the one breaker, has 2 clients, and he's just transferring shares from one client to the next. I think L5 means it's late. So it's after the market close or something like that. So that's why there was large volume on that day. And I don't get excited when I see these large volumes. It's just a transference of shares from one client to another client. More than likely, it's probably one fund manager to another fund manager. So that's the only reason I wanted to include Envirosuite. And let's have a look at the weekly chart because I keep wanting to have a look at the weekly chart. So share price of this company was in an uptrend. So this is the weekly trend. The bottom of the uptrend was in 2018. And you can see the share price remained just above this uptrend throughout the period. And whenever the share price got to this uptrend line, you could see it in December 2018, in March 2020, in June 2021, and then in October 2022, share price rebounded. But look what's happened. In February this year, share price went below that trend line. So that uptrend in Envirosuite share price has come to an end. And you might actually put, so what I'll do here, I'll get rid of that line and then put a nice little support line there. Doesn't quite cover the COVID-19 financial panic, but that's the lows we saw back in June 2021. And the share price is going sideways right on that support level. You just see it right now. Yeah, so when you look at the weekly charts, they're a little bit better. In fact, if you do just take it down, so if we go back here, you just take it there to the lows of that period. Let's see how it corresponds to right now. Yeah, share price has slipped below that support level a few times and then rebounded nicely to go back above that resistance level, support level, I'm sorry. So there is a little bit of strength in the company right now, but the very fact it's flirting right on that level and has been flirting on that level for about a month makes me think the share price will pull back. Company is not profitable. They have a lot of, what do you call it? Like not SaaS. So they did release a Q3 sales update on the 18th of April. AR, occurring annual revenue, up 15% on previous corresponding period to $56.2 million. So that's a fair bit, but the company is still not profitable and still burning through cash. So even though I do follow this company a little bit, I like what they do. I'm not willing to take, oh, look at this. I just noticed this. So if you zoom on total AR, so Q2 financial 23 was 56.9 million. It's actually gone down in the last quarter. Do they mention that? No, they only compare that annual recurring revenue to the previous corresponding period because you want to highlight all the positives, not highlight any negatives. Anyway, I think I'm rambling right now. Now on to Electro Optic Systems. And I did a standalone video for this company not that long ago, like a week ago. Share price went to a high of over $10 back. I still can't believe that. In January, February of 2020, before COVID-19 financial panic. COVID-19 destroyed this company, in my opinion. They had a lot of growth or potential for growth. And I think because of lack of travel, it really destroyed this company's potential. So new management's come in. And when we look at the daily chart, there has been excitement in this company over the past few weeks. Share price went above the previous highs, and then a lot of volatility here as well. So we saw the share price increase 11.5%, 8.8%, and then 12.2% in 3 consecutive days between the 2nd and 4th of May. And then on the 9th of May, the Tuesday, share price fell 15%. That's actually a little bit bullish, fell below this support resistance level. But on the last trend day of the week, share price rebounded 10% and closed at 77 cents. Not quite above that old resistance support level at about 80 cents. So I want to see the share price get above that level and stay above that level. But there's still a lot of uncertainty when it comes to this company, still a lot of risk, particularly when it comes to cash flow and debt. So even though I am a shareholder of this company, I am looking to add to my position if a lot of that uncertainty and a lot of that risk decreases from where it is right now. Potentially the market is getting a little bit ahead of itself, in my opinion. But if the share price keeps going up, I wouldn't mind anyway, because I am a small shareholder. Now to DGL, another company I have owned in the past, and then the CEO did something stupid. In response, It has something to do with another company that listed on the New York stock, not New York, the New Zealand exchange. He mentioned something about the CEO or the founder of that company who was female, and it just didn't come off well. Beautiful, positive, what do you call it? Tailwinds behind this company from when it listed. So when it listed in May 2021, I'm just going to look at the daily chart here. Share price was around about $1. Share price went from $1 to $4.50 in less than 1 year. So I was loving in life as a shareholder then. And then the CEO did something stupid, and the share price has been in trouble since then. Then we saw during on the 31st of August, so no doubt that's in relation to some results. Share price plunged 35.7% that day. That's an automatic sell on a massive volume, because if that was a profit downgrade, bad results, more than likely there's going to be more downside in the future, and there was more downside. But in saying all that, when the share price got to $1.29, $1.30, we'll say, you saw a little bit of bounce. The share price got back to that level in December last year, and then we saw a bounce. Looked like the share price and the sentiment and trend in this company was trying to turn from negative to positive in February, March. You can just see that this red zone turning to green. That is my indication that sentiment is trying to shift. And then we just saw that sentiment shift back to negative in April. In fact, we saw 3 big down days: 5.5%, 3.5%, and 5.7%. And that potential shift in sentiment and trend share price came to an end. And then the share price went all the way back down to $1.29, right on that really good support level. So that support level is backed up by 2 lows in the past. And then the share price on the Friday, so we'll say that resistance or the support level is $1.29. So in fact, we might have a look at the 5-minute chart. So on the Friday, the 12th of May, on open, the share price fell below that support level and then stayed below that support level for the next 2 to 3 hours at around about, got to a low of $1.26. And then for some reason, the share price just went up. Not a lot of volume, and the share price closed well, maybe not well above, but above that support level. In fact, the share price closed at $1.32.5. So what that's telling me, there was a little bit of support when the share price fell below that support level. So the support level has been or is held or is firmly held right now. So this wasn't not a break of this support level. But this is the only reason I might think about taking a position in this company, DGL Group. So market cap probably is much lower than I would think it is, 367 million. Price earnings ratio 12.2. Really good growth in revenue in the last few years. Revenue has gone from 102 million to 369 million. Profit from 4 million to 27.9 million. A lot of tailwinds in this company. Some of those tailwinds have come to an end, but I think just negative sentiment in this company and the CEO has driven the share price down, but I think it could be looking attractive just on valuation reasons. And if we also get a technical signal to back that up, I am possibly thinking about taking a small position in this company. I wouldn't call DGL Group high quality just yet, but I think in the future, 5 years down the line, this could be a high quality company on the ASX. Now on to Mesoblast. I have included Mesoblast in a few of my trading or technical updates in the past, but this is just an extraordinary volatility when it comes to this company's share price since about October last year. $1 is a natural resistance level or support level, and the share price has been oscillating up and below that level since October last year. But it does look like there is a support level at around about 87 cents. So let's zoom in. Actually, let's have a look at the weekly chart first. Always have a look at the weekly chart. And this company has been loved and hated at different times during the past, we'll say 15 years. Look at that hype in this company back in 2010-11. Share price went from 70 cents to a high of almost $9.50 in a short period of time. And then the share price fell all the way back to $1 in 2016. And the share price went all the way back up to about $5.50 in 2020. So $1 was a really good support level because share price failed to get below that level. It did get below that level in May last year, but has really gone sideways since then. But still a lot of volatility in the share price. You can see that volatility. Look at that rise in share price in February. Share price went from 85 cents to $1.32 and then fell all the way back down. Now, the company did release, was it a capital raising? If I remember correctly, it was a capital raising. They did a private placement, and more than likely that private placement was at 80 cents, 85 cents, 85 cents. The reason I say that is when they made that placement on the 26th of April, share price fell 11.6% and closed at about 86 cents, which is just above the price placement. And then the share price has responded, has gone up fairly good over the past, say, 7-8 trading days on pretty good volume as well, nice volume. And the share price has gone back up to above $1.10. But whenever the share price gets above, say, $1.10, even $1.05, the share price in that dollar, actually we'll say $1.08, which is, I'll put in a line there just so maybe you can see it better. So whenever the share price gets above that, you can see it got up to that level in October, got above that level in December, got above that level in February, got above that level briefly in March, and got above that level on the Thursday, 11th of May. Share price struggles and then pulls back. But when the share price gets down to, say, 85 to 88 cents, share price goes up. You've seen it get to that level 3 times in the past. So share price of Mesoblast, even though it is volatile right now, it is trading in a range, and the top of the range has been quite nebulous. I'm not sure if I'm using that right word correctly. And the top of that range is between about $1.10, $1.30. But whenever it gets to the top of that range, share price pulls back. So if I was a shareholder right now, I'd be a little bit nervous, maybe not nervous, but a little bit wary because the share price is right at the top of that range. And I wouldn't be surprised to see a lot of selling coming in and the share price then pull back all the way down to, say, 90 cents or so over the next few weeks. This company needs to sign some sort of deal. It needs to start bringing in more cash flow. I think the market's getting a little bit sick about the company's management. Anyway, I could be wrong. 4D Medical company I've done a one video on, standalone video on, but the reaction from the market in the last few months has been stellar. So that reaction started on the 5th of April. So a month and a half ago, maybe not quite a month and a half ago. Share price rose 63.5% on the day, closed at 51.5 cents. So you might see that sort of reaction go, well, the damage, well, not the damage, but the rises have all been now priced in, up 63.5%. Why would I buy into a company who has just seen a share price rise 63.5 cents? It's ridiculous. I have heard that actually quite a few times. But if you actually bought in at close that day, you would have doubled your money if you sold out near the top in a few weeks. So the reason why the share price increased 63.5% is because of new news. That is because the story of this company has changed. And that's what the market is doing. They're rewriting or revaluing the company based off that new information. So never get afraid of buying into a company when the share price has increased 63.5 cents or even over 100%, because the story of the company has changed and the market is re-rating the company. Let's have a look at the weekly chart. So this company listed on the ASX looks like back in August 2020, went to a high of about $3. So this company is still highly valued, $281 million market cap, but this share price went into a well-defined downtrend, fell all the way down to a low of about 31 cents, and that was the week they released that positive announcement. For those who don't know that positive announcement, have a look at, well, I suppose I can just do it now. I was going to say, have a look at my video. It was just a contract. So, what date was it? It was, let's have a look at the daily chart. It was the 5th of April. So when you see that sort of reaction, just go back to the 5th of April. What happened on the 5th of April? 4D Medical wins commercial pilot with US Department of Defense. They also announced, look, they also announced another, but they had another announcement in regards to a contract. I could be wrong. I'm going through this prospectus. No, that was it. I could be wrong. Anyway, let's go back to the chart here. Okay, so That's right. They also announced their capital raising, which is what management should do. This company is still burning through cash. And when you see a rapid rise in share price, the share price has gone from 30 cents to above $1. That's when you should do a capital raising because it's better for shareholders, less dilution, and you bring in more cash into the company. So less chance of capital raising in the future. And if the share price falls back to 30 cents, that's exactly what you want to do. You want to raise capital when the share price and the value of the company is at its highest. Now, management's not saying the share price won't go up higher from here, but they're just taking advantage of this hype in the company. The last few trading days, the share price has fallen from about $1.20, $1.15 back down to 91 cents. Share price is moving towards my buy zone, my support level. That support level is that green zone or just above that green zone. When there's a little bit more hype in a company, the share price has harder time falling back into the support zone. If I did see the share price get down to say 80 cents into that green level, that's when I would think about maybe taking a position in this company. But if it falls to say 60 cents, that would be a concern based off just the chart, based off the hype. You want a little bit more hype in this company. You want the hype to continue. So it'd be really good if the company keeps releasing some positive announcements. Now, the company, I'm just trying to see if the company did release an Appendix 4C, 26th of April. So this is actually really important as well, just to see how much cash they have on hand. Because of capital raising, cash on hand has increased. So in the last Appendix 4C, they generated $1.2 million in receipts, burned through $8.5 million of cash in operations in one quarter. So you can see this company is burning through a lot of cash. This point in time, they had $36.8 million of cash. So very important to be aware, this company is still burning through a lot of cash. So they completed a $20 million placement. So even though they have a lot of cash, possibly they'll burn through a lot more cash in the future and still might have to do capital raisings. But some of these announcements might bring more cash into the company. Anyway, so that's the other thing I'd probably look at is the future Appendix 4Cs. And if I start to see receipts from customers really climb and the cash burn decrease, that could be a good sign moving forward for this company. Oh, so from the good to the bad, Synlait milk. Another company I was a ex-shareholder in. So let's go back to the weekly chart, all the way back to 2017. Share price went from $3 all the way to a high of $12. A nice four-bagger over about a 1 year period, maybe just a more than a 1 year period. They listed in December 2016, and the high was in September 2018. So 21-month period, share price was a four-bagger. A lot of interest in this company back then. I still remember it. I was a shareholder during not the whole period. I very rarely buy into IPOs. In fact, I never buy into IPOs. So more than likely, I would have bought in around about $5 to $6. And then the share price went to $12. I did not sell at the top. You don't have to buy in the bottom, sell at the top. But I did take profits. Since when the share price dived heaps, that was actually a sign to get out. So when I saw the share price dive on high volume, that is the market telling me to sell and take profits. I completely sold out of Synlait milk back then, and the share price moved into a well-defined downtrend during COVID-19. Even though there was a little bit of a rally in the share price during March, April, it did not get back up to pre-COVID levels, and the share price has kept on falling. I was thinking share price of this company was finding sort of a consolidation period. You can see the share price between May 2021 and March 2023 was sort of going sideways. There was no definitive trend in the share price at all when you look in the daily chart here. In fact, there was periods of time when I was thinking maybe the trend and the sentiment in this company was shifting, but then this massive dive in the share price really started in early or mid-March. Share price at that point in time was $3. Share price has more than halved since then. And the last big decrease in share price was on the 26th of April. Share price decreased 26.5 cents. So let's have a quick look at what that was. It was sort of a market update, I think. Guidance update. So obviously a profit downgrade. Profits downgrades are the worst thing to see when you own a company, because more than likely the share price is going to be absolutely hammered. No reason to buy in the company just yet, because the share price keeps on falling. Really big volume on that day as well. So not a good announcement from Synlait Milk. Market cap of this company is probably about 300 million, 296 million. You can see revenue has increased each of consecutive years. In the last year, the revenue was $1.5 billion, but only profit of 34.7 million, profit margin 2.3%. I do have a concern with that because if there's any sort of headwinds, even with a company with revenue of 1.5 billion, you can see that profit go negative fairly easily if there's any strain, stress on margins. So not a good look for Synlait Milk, but if they do release any sort of positive announcement, I could step on board in the future. But I don't think it's a high quality company. And for high quality or for low quality companies, I'm all about the short and medium term, just riding trends, riding the positive sentiment. Now, it's a company that I'm more willing to hold for the long term. One of the reasons is the best type of company to own is those companies that are transitioning from low quality to high quality. That's when you see most of the share price appreciation. Maybe not most, but that's when you do see significant share price and valuation appreciation. When a company transitions from that low quality to high quality, that transition can occur over a 5 to 10 year period. Potentially, that's what's going to happen with Dropsuite. Now, let's have a look at the weekly chart. I think I've talked about this company in the past. I've definitely done standalone videos. But the share price of Dropsuite was trading in a range. Now, one of the reasons I got excited about this company, did not take a position, was back in late 2020, the company started to focus on profitability. They weren't concerned as much about, I think it was this company, maybe it was a different company. Now, I'm pretty sure it was this company. They were focusing more on profitability than on revenue growth. And that's why the share price really took off in late 2020. But from 2021 all the way through to now, or very recently, the share price of this company was in a range. Top of the range was 25 cents, the bottom range, 16 cents. And the reason why, even though this is a tech company, this chart looks completely different from other tech companies is because of that focus on profitability. So this company was operating cash flow positive. Revenue was continuing to climb. That's the other important thing. So what I was looking for here with Dropsuite was either a breakout of the share price above the range, which incidentally we have seen the last few weeks, or when the share price fell to about 16 cents or just above 16 cents, I was going to take a position. And I took a position in this company in December last year when the share price fell below 18 cents, just because I thought this is the time to buy, just based off the trading range. But what I did not expect was then the company would break out above the top of the range. And we have seen that in the last few weeks. And this corresponded with the company releasing their Appendix 4C in April. So at that point in time, the share price was around 20 cents. And then the share price has taken off. Share price closed at 29 cents on the Friday. And we have seen the share price remain above the top of the range since it went above the top of the range on 21st of April and has remained above that. We have seen on occasion, in fact, about 4 or 5 trading days in the week after that, where the share price went to 25 cents and stayed above 25 cents. That was very important. We needed to see share price remain above 25 cents. And then the share price in the last week has gone from about 26 cents to 29 cents. So I think this could be confirmation that Dropsuite's share price is breaking out. We've also seen some pretty good volume over the past few weeks as well, again, corresponding with the Appendix 4C. So without doubt, there might be some fund managers who saw the Appendix 4C and went, this might be a company I want to own in my fund. And that's the thing you want to see. You want to see fund managers getting excited and buying into a company you have in your portfolio, particularly small cap companies like this. Now, when I say small cap, this company still has a valuation of nearly $200 million. Price earnings 133. You've got to ignore price earnings for this company. But look at the revenue. Revenue has gone from $4.7 million in 2019 to $20.7 million in 2020. So nice growth in revenue. But the company is profitable. $1.5 million of profit in the last financial year. And no doubt, I think the margins on this company will increase. And I think that's why the market's getting excited about this company as well. Graincorp. Look at this chart. Look what's happened in the last few trading days. Woo, it's taken off. Massive volume. This is another potential breakout. I don't think I'm going to be quite as excited about this company as maybe some other people just because of what they do. and just climate issues. La Nina, we have been in the last 3 years, I think, and we're moving into El Nino, possibly, and El Nino might be bad for these guys. I don't know. I haven't done that much research in this company. Anyway, let's have a look at the weekly chart. So we went into El Nino or La Nina back in 2020. Remember, late 2019, early 2020 was all about fires. Remember, ScoMo went overseas and those big bad fires. We don't think much about those fires now because what happened just after those fires? We went into COVID-19. But look at the chart for Graincorp when we went into La Nina in 2020. Share price went from $3.50 all the way up to above $10. Before that, look at the share price, did nothing. Share price going sideways. Let's go back even further. Share price did absolutely nothing since 2002. From 2001 all the way through to 2021, 2020, share price went sideways. And then we saw the share price increase absolutely for a 2-year period because of La Nina, maybe La Nina. And share price has pulled back because market might be thinking, well, La Nina's coming to an end. This company benefited from La Nina. Now we're moving into El Nino. This company won't benefit from El Nino, but the market was wrong. Maybe I was wrong as well. Company did release, was it half-year results? Graincorp half-year results and updated earnings guidance. This is a profit upgrade. I love profit upgrades. So let's have a look at this. I haven't looked at this actually before. Outlook. Graincorp upgrades its financial year 23 earnings guidance. Previous EBITDA was 470 to 530. Now it's 500 to 560. But more importantly, this is a true profit upgrade. NPAT or profit. Previously 180 to 220 million. Now 220 to 260 million. We are seeing good global demand for Australian grains and oilseeds and expect a strong export program to continue in the second half. Conditions have been generally favourable leading into the 2023-24 crop planting period with good rainfall to date across most areas. That's the most important thing here. Good rainfall to date across most areas. I'm assuming most of the areas are in Australia. And if we do go into an El Nino, that good rainfall will be the complete opposite in 1 or 2 years. A deficit in rainfall has led to unfavourable winter crop planting period. So keep that in mind for this company. I am very wary of agricultural companies because they're not absolutely price takers, but their business is affected by climate, affected by pests, that sort of thing. Anyway, well done to Graincorp. Nice profit upgrade, but not a company for me at this point in time. I could be wrong, but that's the thing. You can be wrong, but just don't dwell on it because there's going to be a lot of situations where you're going to be right. And you should dwell on those. Dwell on those. Dwell on being right, not wrong. Because there's a lot of opportunities out there. Now it's Besra Gold. So this is a weekly chart. Irrelevant. Because from this period, if you can see my mouse, right there, the start of this chart, all the way through to here, that is a period between 2013 and 14, because there was a company on the ASX with a ticker code BEZ. Then that company went away, and then Besra Gold, this on the ASX. And from when they listed, share price fell and fell and fell and fell until recently. And then the share price just taken off. Massive volume as well. That's the most important thing, is the massive volume. So I did do a video on this company when it started taking off. I think the share price, when I did a video on this company, share price was below 10 cents. And then the share price kept on going up. Share price increased 102.3% on the 9th of May. Why did the share price increase 102% on the 9th of May? And I think the market was being absolutely ridiculous when it increased that amount. So I was not surprised, am not surprised to see the share price take 3 massive falls in consecutive days, down 18%, down 8%, down 9%. In fact, the share price has fallen from a high of about 45 cents down to 30.5 cents. So share price has actually gone down 15 cents from 45 cents, 33% in 3 consecutive days. And I just don't understand the reaction from the market. So let's have a look at the reason why. Well, this is the reason why the share price increased over 100% in one day, but I don't think it really justifies that sort of reaction. I think it's just a lot of day traders getting a little bit over excited. So on the 9th of May, so the whole reason the market got excited about this company was this $300 million US dollar, $300 million US dollar finance facility. So the finance facility is not free money for this company. It's $300 million they're going to have to pay back through gold or some other reasons. But this gives the project, I think it's in Malaysia or Indonesia, a little bit more certainty. So let's have a look at this finance facility, which has been in play since last year. And when they announced the probability of this finance facility getting through, there was no excitement in the market. It was just when they confirmed getting through. So the facility provides up to $300 million deposit to be paid over 30 months. So Besra confirms receipt of the first $2 million installment of the $5 million initial deposit. So there should be no surprises here, I think, in my opinion. I'm just trying to remember where this project was. They don't mention it in here. But it's really interesting to see how they're going to repay this $300 million facility back. Under the terms of the GPA, the company has agreed to sell to Quantum a quantity of refined gold from BAL or any other gold project owned by the company until 3 million ounces of refined gold has received by Quantum or aggregate deposits in amount equivalent to $300 million US dollar. The facility has been received by the company from Quantum. So the company has to pay this $300 million back to Quantum in gold or in deposits, aggregate deposits. So I don't look at these $300 million as anything else but debt, which means because they have to pay it back and you have to add that to the markup. So the current markup of Besra is $118 million. So enterprise value of this company is about $450 million. Now, I don't know this project. Maybe like the net present value of this project is $1 billion or $2 billion, which makes sense and why the market might be getting excited. But I have to do a little bit more research on this company. But this is why the market got excited about Besra, is just around this $300 million US dollar finance facility. That's all I have for this technical update. No doubt this video is a little bit longer than I had hoped for because I know, just knowing myself, that sometimes I can ramble on. If you have any questions about any company I featured in this video, I'd love to hear your thoughts about those companies. So leave your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye-bye.